Hey everyone, welcome back to Corporate Decoder. Today we are diving into a company that had to do a little cleaning up after its initial report. It's like when you think you aced a test, but then the teacher says, surprise, there's a correction. So let's see what this real estate company, Sila Realty Trust, had to fix in their recent financial statements. Sila Realty Trust, a real estate investment trust, had to refile some financial information for the quarter that ended in March of 2025. It's not uncommon for companies to make corrections, but it's important to understand what changed and why. This company focuses on investing in healthcare related properties. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. The reason for this amended filing is that after their initial release, they found an error in how they accounted for a loss on some debt. This wasn't a cash transaction, but it still affected their financial numbers. In other words, it's like realizing you miscalculated a big deduction on your taxes and having to refile. So what exactly changed? First, their other assets increased by $803,000. Think of assets as what a company owns. So this means they had to add a little over $800,000 back onto their balance sheet. Next, their interest expense decreased by $803,000. Interest expense is the cost of borrowing money. By reducing this expense, it shows they had slightly lower borrowing costs than initially reported. Because of these changes, their net income, which is the profit available to shareholders, increased by $803,000. That's good news for investors. Specifically, this bumped up their earnings per share from $0.114. Now, let's talk about funds from operations, or FFO. This is a key metric for real estate companies. It's a way to measure their cash flow, excluding things like depreciation, which can make a real estate company look less profitable than it is. Their FFO increased to $0.52 per share. Core FFO is another non-GAAP measure that companies use. The company has not fully explained this term in the filling, but it appears to be the more true result of their FFO number, and they did decrease it by $24,000. This means that the updated core FFO remained at $0.43 per share. So what does all this mean? It's a mixed bag. The correction improved some key numbers like net income and FFO, but it also highlighted that initial reports can have errors. For investors, it's a reminder to look closely at these reports and understand what's being presented. Now let's step back and look at the bigger picture. Sila Realty Trust operates in the healthcare sector, which has been pretty stable. However, rising interest rates could affect their borrowing costs and therefore their profitability. Also, changes in healthcare regulations can impact their tenants, which in turn affects their rental income. Overall, the financials appear okay for a company in this specific area. The fact that some numbers were updated might indicate a few things. Maybe they should get a better accountant, or maybe they are just trying to paint a better picture than reality. Whatever the reason, it is worth taking these numbers with a grain of salt. In conclusion, Sila Realty Trust seems to be navigating a stable but potentially challenging market. Investors should keep an eye on interest rates, healthcare regulations, and of course the accuracy of their financial reporting. Alright, that's our breakdown of Sila Realty Trust's amended filing. What's your take on these corrections and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.